What's going on? It is Solo E, and in this video we're going to get straight to it. I'm actually going to be showing you guys a nice little Fibonacci strategy that you can implement if you are a scalper, intraday trader, or even a swing trader. So make sure you watch this video from now and all the way into the end, because like I said, I'm gonna give you guys some fire information that you do not want to miss out. Keep it loaded, most silent. Yeah, get it loaded. So first and foremost, if you aren't already, subscribe to my YouTube channel, because on my YouTube channel I discuss everything from trading cryptos, from Forex trading, how to grow accounts, how to build accounts, and how to stay consistent and a profitable trader. So please like and comment and subscribe to my YouTube channel so you don't miss out on any fire gems. Now, as you guys see, I actually do have a 6-page PDF that I am actually giving out for absolutely free. If we can get this video to 500 likes, make sure you share with your friends, your kids, your family, I don't care. But man, make sure we can get this video to 500 likes. And if we can, that link will be down below. This is going to go way more in depth as far as what I'll be breaking down in this video, so you guys can use this for when you start to trading right away. Okay, so first and foremost, I always make sure I break down the perfect setup, the perfect demonstration, so you guys will understand exactly what to look for in the live market. Now, I dropped previous videos on this before where I talked about liquidity grabs and so forth, but I have not dropped a video on liquidity grabs using Fibonacci. So that's exactly what we will be doing today. So let's go ahead and talk about first understanding how structure looks when it grabs liquidity, and talking about when we should be using the Fibonacci and how to use the Fibonacci if you're buying the market or selling the market. You always want to start in a higher time frame. I require anything from a daily, the 4-hour, just anything where you can see the overall picture. But here's one thing you do not want to do. When you are on the daily time frame, let's say that right now we jump on a daily time frame, and as us being on this daily time frame, we're noticing that, hey, well, look left, we see market basically created higher highs, higher lows. We see we have a higher high, higher low, higher high, higher low, higher high, higher low, higher high. So everybody's perception on market is now like, all right, we're gonna go up. Let's buy. Here's the big problem. If you scout, or if you're an intraday trader and your main problem is, and even a swing trader that is focused on a lower perspective, you are already finna miss out on a lot of opportunities or probably blow your account because you too worried about all of this in the left hand side. So what I want you guys to do is actually just focus on all of this right here. That being said, I want you to look for the most recent impulsive wave. The impulsive wave consists 5 cycles going up or going down. I have videos on that. I will be dropping more videos. If you guys want me to drop a video on Elliott wave more in depth, make sure you comment down below. Solo E, drop that Elliott wave video. But we look for impulsive waves. Once we spot that, we must spot a correction. This is how we restructure. This is how we're going to restructure to determine a Fibonacci play and a liquidity grab play. So if we look for the impulsive trend, and then in the midst of us looking for the impulsive trend, we look for the consolidation. Now, consolidation also can be seen in 3 to 5 waves, and this goes into Elliott wave terms as well. So let's say that right now we see on the daily time frame that market broke structure, broke this low, and now it's going down. However, we notice on a smaller scale, it broke this structure, now it's going up. And then now we notice market decided to shoot down because overall trend is telling us that it's going down. But the reason why we see this quick little move to the upside is because this is the pullback. This is what I'm about to literally get you guys on point. So what I want you guys to remember is the daily 4-hour, you look for the overall picture in the moment. Don't go too far out. If you're trying to go too far out, you go on a higher scale like a weekly or monthly or even a yearly and find that information. But for my scalpers and intraday traders and even swing traders that swing trade for maybe hold a trade for a couple weeks. Wait, before we continue, I want to talk to you about today's sponsor, Hanko Trade. Hanko Trade is one of the best trading platforms for MT4 and MT5 if you're looking to grow an account. You guys are actually able to come here and select which type of account you are using. If you're using anything under, even starting from $10, you can select STP. Otherwise, I require everybody to go with the standard or with the standard plus, just because it is the most common. But of course, you have way more fluctuation, seeing that you already see spreads can be formed from 0.0. I mean, it can't get any better than that. So like I said, guys, if you are interested in signing up with Hanko Trade, make sure you check the link down below. Otherwise, you can go ahead and get started with a small account and you can start growing your small accounts right away. Otherwise, guys, let's go ahead and get right back to the fire gems. Now, if we go back to my perfect analysis, we want to see structure break, right? We want to see market come down, create a new low. So if we do this, you guys can see how structure broke this low to create a new low. Structure broke this low to create a new low. And then out of nowhere, we noticed market had broke this high to possibly create a new high. This is all we want to see. This is what a lot of people say, change of character, change of structure. At the end of the day, it broke this high, and that's all we're sticking to. I don't care about the names, the lingos. I do not give a about any of that. So all we see is that structure was going down, but then it reversed. Now here's where the Fibonacci comes in play. So if you guys want to figure out how far the previous or the potential new low, which will be this here, we will take our Fibonacci, drop from the most recent high to the most recent low, because we're trying to calculate based off the Fibonacci how far that next impulsive wave going down can extend to before we go the other way. Because potentially we want to now go the other way for a bigger pullback, which I just showed you guys on a higher scale, which basically looks like this, to go even further down. But we're trying to catch some plays in here by using the fibs. So this is what we're going to do. So we need to find the most recent high, which it will be this, and the most recent low, which will be here. Once we find that, we draw our fibs from those two areas. Since we are looking for this to go down, we're going to start Fibonacci point at the highest, most recent high, which will be here, to the low. All this here hasn't happened yet, so we're just going to X that out like that never happened yet. So as we do that, you guys see my -27 and my -618 are my gold mine, or I like to call my POI, point of interest area, or my potential new low. Somewhere in here is where I'm looking for that market to settle, to possibly go the other way, to do that bigger, what we call pullback, going up. So notice how market did peak in this area, and then now since it peaked in this area, now I have my bias set to, all right guys, we should be breaking structure. So this being said, if you were to catch a trade within this high, you will absolutely ride it to these Fibonacci points. This is how far liquidity would be grabbed if you were to ride it to these points. So now let's just now go back to what we were saying originally. If we come back to this high right here, when market now breaks this high, because we already established using the fibs and seeing that liquidity was grabbed here, seeing that the market was going down, we could potentially now see that this could be that bigger pullback to go up further than possibly shoot further back down. So what we need to do in order to use our fibs, we need to find the A leg and the B leg. The A leg is the impulsive wave. The B leg is the correction. Guys, I want you to notate this. This is something I talk about in my VIP and also talk about in my course, my elite course, and also my advanced course. In a correction, I notice a lot of traders, when they get that first pullback, they immediately want to buy it all the way up here. Guys, that's not going to happen, because corrections creates 3 to 5 cycles before it actually heads up or even down. So you will notice sometimes you maybe see something like this, something like that, and then goes up. Or you might notice you might see something like this, something like that, and then it goes up. And that's basically what we need. So we need to see 3 waves to 5 waves first before we buy. One thing you want to do is patience. You want to wait for you until you see those 3 cycles, those 3 waves. Notice here we got wave 1, wave 2, and then wave 3. Once we get those 3 waves, this is when we want to draw our Fibonacci from that most recent low, because now we're trying to find the buying setup. So we started from the most recent low to the most recent high, which is here. And wherever we see our -27 and 618, you know, you can visualize a box, and inside here is where I'm looking for to TP. and then potentially, not saying this is always accurate because this is not accurate, otherwise we all would be driving our dream cars, but potentially this is where you might see that bigger reversal going down, or you might actually get a bigger 5-way cycle, which looks like this, and then continues to go up and then it drops. Because if you guys look here, we have a 5-way cycle of 1, 2, 3, 4, and then 5. Like I said, you see this consistently. So that being said, that's the perfect world. Now let me show you guys this setup in a live market so you can understand how it looks. Okay, so here you guys have it. We're looking at GBP USD. This is actually something I posted on my VIP, more in depth, but this is just a different concept, just showing you guys from scratch. So we figured out the previous area or the previous range, right? We need to establish the high, and then we need to establish the low, which is these two areas here. Within this high and this low, we got 5 cycles in here. Like I said, guys, if you don't know what I'm talking about, subscribe to my YouTube channel so you can get more in depth so you don't miss out anything that I'm dropping. But we got 5 cycles that's happening inside here. As these 5 cycles occur, like I said before, you're going to now get the other reversal market going the other way. However, we are just focusing on one thing. We're trying to look for how far liquidity can be grabbed from the most recent low, which would be this here. Notice how my fib points come to 27,618. Notice how my fib points is also in another liquidity grab pull area, which is, if we come over here, you guys see right here. So that being said, I am very interested in market tapping that, which it honestly did. Now, this is the exact same concept that I broke down earlier. If you guys look here, we basically have this most recent high right there. Now, after market broke that high, this is what we need to do. I am on the 4 hour. You probably cannot or can see. I jumped on the 1 hour. Now, we also will be getting a 5-wave cycle happening here, or 3 to 5-wave cycle happening, which will be at 1, 2, 3. Once we get that, this is when I will draw my fibs from the most recent low to the most recent high. So depending on what time frame you're looking on, since I'm on a 1 hour, I see that this is my most recent low, this is my most recent high. I am now waiting on this 3-way cycle to happen. 1, 2, 3. Once this happens, I am going to now buy it to anywhere inside this box level here. I look left, I also see that this is some area of supply, order blocks, demand, and balance. We got a lot of stuff going on here. So I then now go ahead and mark this as my P&H, potential new high, and this is where we take that opportunity. Guys, this is literally all we do for when we get into trades. I'm gonna even show you guys further. There's 2 trades that we took on NASDAQ 100, which we made tremendous pips off of just by doing this simple play. All right, so this was actually caught on a 5-minute. I actually took this trade off the 30-second. I caught it for a 30-second play. We already established market was going up, clear as day, right? Breaking highs, breaking highs, breaking highs. So I was like, all right, makes sense. I want to see a 3-wave cycle before I buy. I noticed we got it here. We got a 5-wave cycle from this low to this high. So all I simply did was drew my fibs from this low to this high. As I drew my fibs from this low to this high, I noticed that before I get in this, I want to see a 3-way move. We have it 1, 2, 3. This is known as a zigzag pattern, which is something I talk about in my VIP Discord. I talk about this in so many places, even on my YouTube. But this is a 3-way cycle here. Once again, how many waves do we need to see in a correction before we actually buy it? 3 to 5 waves. We got a 3-way cycle. So right here, as you guys see right here, this blue mark, this is actually paper trading. My paper trade on TradingView, just to show you proof. Right, I'm just showing you guys proof that this was something I did called out. Actually, you do see the before and after already on Discord, but you also see it here. I took this opportunity, I brought it here. Also, I noticed that it tapped this liquidity area right there. It came out, grabbed some liquidity, and then immediately it went up. And then I actually ended up taking TP here on my paper trading account. But as far as me calling out on signals, I basically said this was TP1, TP2 is here, and the TP3 would have been like 50% inside here. Now, like I said, if you want more gems, more fire info, subscribe to my YouTube channel. Check out some of the links down below. Also, guys, once again, if you need a broker to sign up, make sure you check out Hango Trade. It is actually really good for small accounts. It is one of my preferred brokers to use, especially if you're trying to trade NASDAQ 100 with $100, $50, and just anything around that. So you guys can go ahead and sign up. That link is down below. You guys also seen it popped up a couple times, but like I said, check them out and get everything going from there. Otherwise, guys, I appreciate the love and support. Other than that, see you guys in my next video. Peace, your boy Solo.